Hey guys, welcome back to Financial Professional. Today we'll talk about what will happen when Tesla hits the S&P 500. Let's get into it. Number 3. What Tesla needs to hit the S&P 500. For fund managers, beating the S&P 500 is notoriously difficult, but simply replicating it as closely as possible is not always a picnic either, and a way to make it a little harder has been found by Tesla Incorporated. The electric car company's market value currently stands at around $277 billion. That will make it one of the S&P 500's largest companies, except that it's not yet a part of the index. S&P Dow Jones indices, the keepers of that list, have a rule that before being added, new companies must have been profitable in their most recent quarter and over the past year. Tesla has just crossed that line with its latest earnings.
But recently, things have been even more interesting. The price of Tesla stock has increased about 80% over the last month.
For managers of index mutual funds and exchange-traded funds, the possible addition of the car maker is a big event. For one of the greatest potential trading challenges they have faced in years, they're already hashing out strategies. Tesla will be the largest company ever added to the index in dollar terms, which $11 trillion of investment managers either religiously track or use as a benchmark. At the current prices of Tesla and other stocks, managers of passive funds will have to sell about $35 billion to $40 billion of shares in the rest of the index's companies to make a hole big enough to fit the purchases of Tesla shares, according to Jerry O'Reilly, a principal and portfolio manager at indexing giant Vanguard Group Incorporated. Assuming it's going to be added, it'll be all hands on deck type of trading, he says. For Vanguard's 24 US traders, plus a team of analysts who work on keeping transaction costs down, there is no template to follow when it comes to efficiently handling a stock as large and volatile as Tesla, nor is it easy in the general market to predict the ripple effects. The shift could be announced at any time in the index composition. The addition could theoretically take place along the departures that are being acquired by E-Trade Financial Corp or Tiffany & Company, or as part of a routine quarterly rebalancing in September. Index funds can receive notice of the switch for as little as a few days, so if they should start buying before the addition, the day the stock is to be added, or afterwards, they need to decide. Picking which approach is not as straightforward as it sounds. While Tesla stock may be bid up by traders trying to take advantage of demand from indexers, other investors may treat it as what O'Reilly calls a super liquidity event. That is, longtime Tesla shareholders who are looking to trim positions may try to get out when they know index funds have to buy. The two types of investors have been able to cancel each other out. There are all sorts of cross currents, O'Reilly says. He says he's confident Vanguard will be able to handle the switch without a major tracking error. That is a dislocation between the performance of the index and the funds that follow it.
At this valuation, when we still don't know ultimately if it's as profitable as it's said it is in the last 4 quarters.
Number 2. Unconventional path to the S&P 500. The path of his company into the S&P 500 is unconventional, like many things about Tesla Chief Executive Officer Elon Musk, which explains how Tesla became the gorilla in the index fund audience room. Despite a record dotted with more quarterly losses than profits, investors simply believed in the Tesla story enough to bid the share price into the stratosphere. With the most highly valued companies taking up the largest share of the index, the S&P 500 is weighted by market capitalization. Tesla would have qualified a while ago if that were the only standard. A market value of a little more than $8 billion is the threshold to be added. The committee that determines the S&P 500's membership keeps mum about when, or even if it plans to add Tesla. Companies who meet the eligibility requirements are not automatically added to the index, said an S&P Dow Jones Indices spokesman in an emailed statement. They join a pool of other eligible candidates and are considered for inclusion when an opportunity presents itself, at which point the index committee takes several factors into account, such as sector balance and size representation. The S&P adjusts their value to reflect the number of shares available for trading when figuring out how to weight companies in the index. Using that standard, if it were included now, Tesla would likely be the 17th largest company in the S&P 500, with an index weight of about 0.8% between PayPal Holdings Incorporated and Pfizer Incorporated. A decade ago, one of the largest additions to the benchmark in recent history occurred when the Berkshire Hathaway Incorporated of Warren Buffett, which at the time had an adjusted market value of $127 billion, far less than today's Tesla. But in the index, it represented a greater weight then. While indexers are strategizing on how to deal with the shakeup in the world of passive investment, traders with a more active approach will try to figure out how to profit from the price swings generated by the potential announcement. The trade would basically be to buy Tesla, sell everything else, and you'd start to see that in the market, says Steve Sosnick, chief strategist at Interactive Brokers.
First of all, does the committee want to defer to the market's momentum here?
Number 1. Conclusion. Still, after a gain of as much as 293% this year, it is possible that expectations are priced in Tesla's shares. A work in progress posted by the National Bureau of Economic Research in July, titled "Does Joining the S&P 500 Index Hurt Firms?" found that stock pops linked to the announcement of index inclusion have gone away, and the lasting effect on price in recent years have been downward.
But once it's actually added to the index, then all of that pent-up demand slows down, the stock price drops.
Its shares have fallen 6.6% since Tesla reported its earnings. Firms included in the index platform extremely well in the year before they are included in the index, says Renee Stultz, a professor at Ohio State University and one of the paper's authors. Our results would also imply that getting into the index would not lead to another boost in Tesla's stock price. What do you think about Tesla? Do you think it will hit S&P 500? Let us know in the comment section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.